The United States just admitted it's losing the AI race. On April 20th, the White House invoked the Defense Production Act, wartime law from 1950, the same one used to build tanks, pointed at the power grid. That's a Sputnik moment. China's grid is twice the size of America's. NVIDIA can build the most powerful chips ever made. None of it matters without electricity to run them. 8 stocks sit at the heart of the buildout that fixes this. The smallest of the 8 is my number one. Just booked its first ever data center mega project. I'll get to it. Stay with me. Not a financial advisor, numbers as a filming. The April 20 announcement from the White House isn't a new spending bill. It's something more unusual. U.S. data center load is forecast to nearly double, 82 gigawatts in 2025 to 153 by 2028. A second country's worth of electricity demand bolted onto a grid we haven't seriously upgraded in 40 years. April 20th is the federal response. Truman signed the DPA into law in 1950 to keep America's industrial base ready for war. Pointing it at substations, transformers, and transmission components is a first. Behind it, the one big beautiful bill, $289 billion in federal load authority pointed at domestic energy. The grid order targets every layer that moves electricity from generator to chip. The urgency is real. In January, the PJM board, managing the largest power grid in North America, serving 67 million people, launched a reliability backstop plan. Their last auction fell 6.6 gigawatts short. 6 months later, the White House escalated to wartime authority. Federal money, wartime law, bipartisan urgency, all converging on one stack. Why now? The gap with China is widening fast. By 2030, China will have 400 gigawatts of spare power capacity ready to fuel AI clusters, 3 times the world's expected data center demand. U.S. spare capacity has dropped from 26% to 19% in 5 years, closing in on the 15% threshold engineers called critically tight. April 20 is what happens when the federal government realizes a peer adversary has built a structural lead on the infrastructure of the AI race. The companies cashing those federal checks aren't the chip makers, they're the picks and shovels of AI. Every quarter, the catalyst doesn't show in their numbers is one less quarter to position before it does. 3 layers. I call it the power stack. Generation creates electricity. Transmission moves it. Delivery gets it to the chip. Each layer has a bottleneck. Each bottleneck has a buyer. The federal money is pointed at all 3 at once. 8 companies, 3 layers, 1 catalyst. Layer 1, generation. EQT. They're the largest natural gas producer in the United States. They pump over 6 billion cubic feet of gas a day. Natural gas is the bridge fuel until nuclear scales. And the federal mandate just made domestic gas production a national security priority. EQT pumps the gas. The next name burns it as carbon-free baseload. Constellation Energy, ticker CEG. Until January, they ran the country's largest nuclear fleet, 22 gigawatts, 26 reactors across 6 states. Then, they closed the Calpine acquisition on January 7th. Now they sit on 55 gigawatts, largest private sector power producer in America. Federal nuclear permitting and the DPA invocation flowed downhill into Constellation's income statement. Constellation runs the plants. The next name builds them. GE Vernova builds gas turbines that EQT's gas burns in. End of Q1 2026, their gas turbine backlog hit 100 gigawatts, up from 83 the quarter before. They booked $2.4 billion in data center electrification orders in a single quarter, more than all of 2025 combined. Read that again. 1 quarter beat the entire prior year. They've guided to 20 gigawatts of annualized turbine production by mid-2026, with a path to 24 by 2028. Factories running near capacity. Customers are booking turbine slots 3 to 4 years out just to get in line. Triple catalyst. AI demand, energy independence, federal funding, all landing on the same income. Generation is the layer everyone talks about. The next one is the layer nobody does. Layer 2, transmission. Everyone talks about generation. Nobody talks about how electricity moves. You can build all the power plants you want. If you can't move the electrons, the data centers go dark. 2 pipes carry energy across America. molecules and electrons. Both are bottlenecked. Both got named in the April 20th announcement. Energy transfer, ticker ET, the molecules. Roughly 140,000 miles of pipeline. They carry the gas EQT pumps to the turbines GE Vernova builds. April 20th didn't just cover electricity. It covered energy and an energy-related infrastructure. Pipelines included. Energy transfer plans $5.5 billion in new gas infrastructure in 2026 alone. Energy transfer moves the molecules. The next name moves the electrons. Quanta Services, ticker PWR. They build the transmission lines, substations, and high-voltage hardware that move power across the country. End of 2025, their backlog hit a record $44 billion. They employ 68,000 craft-skilled workers, welders, linemen, electricians. When federal capital hits, Quanta is the company physically building what the announcement calls for, from the wires to the chip itself. Layer 3, delivery. Getting electricity safely and efficiently to the actual AI chip. This layer is the most directly tied to NVIDIA's chip shipments. No delivery infrastructure, no working AI factory. Eaton controls how electricity flows inside data centers. Switchgear, UPS, power distribution. Their equipment sits between the grid and the chip. Eaton controls the flow. The next name wraps the rack itself. Vertiv, the cooling and power infrastructure that wraps every AI rack. In March, NVIDIA released the Vera Rubin DSX AI factory reference design. Vertiv is a named partner on power and cooling. Their building blocks scale from a single cluster to gigawatt-scale AI factories. If you can't cool the chip, it's an expensive paperweight. The last one is the one I keep coming back to. Powell Industries. Custom-engineered electrical equipment for utilities, oil and gas, and increasingly data centers. Record $1.6 billion backlog as of Q1 2026, up 16% year over year. Their data center segment is the fastest growing piece of the business. I'll come back to this name at the close. There's an irony nobody is talking about. AI will displace millions of white-collar jobs, but the build-out creates millions of blue-collar jobs. Welders, linemen, pipe fitters, nuclear technicians. Federal money is hiring labor to build the infrastructure that will eventually replace labor. That's not a contradiction. That's the whole story. A jobs program disguised as an AI strategy. 3 real risks before you act on any of this. 1. The DPA invocation establishes legal authority, but stops short of projects, funding, or timelines. DOE still has to issue implementation guidance. If that takes 18 months, the catalyst slips, and these names trade sideways. 2. Even with federal backing, the U.S. is structurally behind China on power capacity. April 20 narrows the gap. It doesn't close it. China keeps the structural lead through at least 2030. 3. Transformer wait times are already 40 months. The bottleneck isn't capital, it's manufacturing capacity. If the supply chain doesn't scale fast enough, the federal money sits unspent. That's the slow motion bear case. Not a crash, just a long delay where the revenue arrives years later than expected. Now, the name I'm watching hardest across all 8, Powell Industries. That $75 million data center mega project I teased at the top, that was Powell. Their first ever deal at that scale. Smallest cap in the lineup, 3 end markets, utilities, oil and gas, and data centers, that line up almost perfectly with what April 20 targeted. The federal funding tailwind is barely in their numbers yet. The trade-off, higher execution risk than the larger names. Powell has to scale fast, and that introduces supply chain and capacity risk that GE Vernova or Constellation doesn't face. That's the price of asymmetric exposure. The market sees AI infrastructure as a chip story. You see the entire stack, generation, transmission, delivery, being rewired by federal capital under wartime authority. That gap is where the work-optional portfolio gets built. When the next AI chip launches and the headline is a chip, ask one question: where is the power coming from? Every generation of chips is another generation of demand pointed at this stack. The best investments aren't the ones everyone is talking about. They're the ones solving problems nobody wants to look at. the boring industrials, the names that show up in earnings call transcripts but never on Twitter. Right now, nobody wants to look at the power problem. That's exactly why I am. My newsletter isn't a stock breakdown. It's how I use first principles to spot the structural shifts moving markets and the companies positioned to benefit. If that's the lens you want, links in the description. I'll see you at the next catalyst.